Hi, good morning, and welcome again to another edition of Market Analysis for today, August 7th. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. Alrighty, so another week, and we're gonna be having some pretty good information this week. Late this week on Thursday, we should be receiving a CPI number, and that's due to remain high around 4.8% for the core CPI number, and which is still an uncomfortable number for the Fed. And on Friday, we got the PPI number. So between now and then, we'll have the likes of tomorrow to be reporting as such as UPS and FedEx, which are kind of like the bellwether of the economy, telling us how things are. So that should be, which is basically the Dow, the Charles Dow theory when he began doing his theory, just analyzing the wagons, the trains, the transportation, what was being transported, the demand for wagons. So we obviously now we have that, and we have planes, we have both, but obviously UPS and FedEx are one of those that we're going to be seeing how well that business is doing. So we'll have that later on tomorrow. Now, let's take a look at the markets then. Today, the Nasdaq seems to be opening with a small gap to the upside, which hasn't been closed. So the momentum could drive, roll over into the opening. 15,500 will be my intraday high resistance for the Nasdaq. And see, I have Friday's high as my resistance, but let's see if that would be met. Now, here in regards to the S&P 500, now we have seen an impressive strength recovery since this October low, October 13th low, and that was obviously last year. So, which in many ways almost as impressive as the preceding sell-off, as we see right here. Now we know that global equities, they peaked on around January 2022, and then from that peak, the S&P drops about 27%, and the Nasdaq about 37%. And then since that October low, we have seen how the markets, or how the S&P has recovered pretty well, making from this particular high right around December 1st all the way down to the 22nd, which the market created a bottom or a low and nice support zone from here. And from here, that's one cycle, right? Then we have a second cycle here. And now we understand that on the way down of that 20 to 27% decline, we had this very important counter trend moves, these sharp rallies, which gave way to new lows. Now, well, so too from the low of October 14th, 13th to where we are now, we have had two very distinctive counter trend moves, sell-off, drawdowns, corrections. Now, that was the December 1st to the 22nd, sell off right around about 8.2% of last year since that October low. There was, of course, a second one from February to March of this year down in this current day-to-day week-over-week sell-off of the third normal garden variety sell-off. So from this high, we have this sell-off low. Now, from this low, the market has been rallying, just making nice momentum to the upside. So we are here making this conjunction or this highs, and I created this channel, so we can either say that the market, if it's gonna do a correction, a pullback, a drawdown, okay, will that be another 5% from the high that it made? So let's grab that 4,600, just round number, times 5% minus. So that's 4,370. 4,370 is right around here. Look where it's at, right? So if we are going to go into a correction in the S&P 500, you could use this as a meter to see, to place your targets, and 5% is where something breaks. Okay, a lot of risk managers may have, a lot of traders may have their stop orders there. A lot, the risk management will might come in here and tell people, you're gonna have to cut your losses and come out of, get out of those positions, and then obviously the market will continue to drop another 8%, that 3% to be 8. So perhaps somewhere around here, 40, around the 4,200 could be that level where the S&P could drop off to. Otherwise, if the market is healthy and we continue to see good numbers and the economy continue to move steadily, then we could just probably contemplate that this pullback uh, towards this level of which was previously a resistance now has become a zone of support, an area of support. So we could probably contemplate that the market will rally to the upside, but very short lived because we have obviously this resistance level that has been met. So let's see what could happen between those things. Now here, as far as the Dow goes, the Dow also opened up a small gap up, so that could contemplate into into strength into the open or a continuation of the movement to the upside. Then we have crude oil that has been making nice movements higher. 83 and change has been the resistance for it. Today it was met. It met it as the as Friday's high. So right now we are just seeing how the market is probably is profit taking into it. The RSI is not in the overbought territory, so we could contemplate that another leg to the upside could be in the works. Then we have Nat Gas that is just really piling up. Nice rally to the upside. 270 was my initial target, but obviously we have this. If it's met, if it's violated, we have this area here, which is 277 around that, where we could probably find that resistance and stop the market from moving higher. Then we have gold. That gold is open with a strong gap up. Okay, it has been closed. So now the momentum to the upside could continue, and that's what being founded if the dollar index continues to drop. Then we have silver that also made that this one made a gap down. However, opened up with a gap down. It was closed. So let's see if it recuperates and move higher. Then we have copper that is looking to stay within range of last week's movement. So we have a very heavy zone to compete. I'm looking at 385 to be that consolidation area. Then we have Bitcoin that is just really flattish, very low volume. This is acting like a cooker pressure at any given time. It could just break out to the upside or to the downside, whichever way. Nobody really knows unless you're inside a trader. Then we have the currencies that are looking to regain that 110 and stay north of that 110, and it could happen. The pound is also looking to stay north of 127.50, and that could happen as the dollar index continues to drop and see if now all of this news have finally come into fruition and continue the market moving lower. Obviously, the rating of by Fitch of the U.S. government, our government, they downgraded them, and that could obviously that will bring some pressure to downside on the dollar index. And if that happens, the dollar index happens to lose shine and continues to make lower lows and lower highs, enter into a downtrend, and then we could probably see a rally into the currencies, the metals, crude oil, and indices. Okay, so keep that in mind. All right, that's it for me today. Have a fantastic trading day, and I'll see you tomorrow.